All right. Welcome back, Super Stock Bros. It's your boy Bub. And today we're going to talk about everything crypto. What is Bitcoin? How do you buy crypto? How do you own it, trade it? Cryptocurrency, Doge, Ethereum, ADA. And we got two experts, one noob. I'm a noob myself, so two noobs. And we're going to talk everything crypto, how to get in, how to make money, and how to trade crypto. So let's get this show started. Let's run that intro, shall we? Okay, welcome back, Super Stock Bros. It's your boy Bob, and today I'm joined by Alex, crypto king over here. I think he's got a couple of rigs. He's mining Ethereum. We got Basir. He's a fan of ADA. Let's just get the intro started, Andrew. And Andrew, our token noob today. He's a recent crypto owner, and he's got an excellent wine business. I think you can buy crypto with it soon. Stay tuned for that. So I own ADA myself and a new token called Ergo, and we'll go over those later. But let's get an introduction from Alex. So Alex, you want to say hi and tell us a little about your background in the crypto blockchain world and what are you doing there?
Sure. Yeah. My name's Alex Zorkin. I'm the CEO of Big Think Technologies. I've had a big interest in crypto for a number of years, sort of got into it in the last bull run, sort of late 2017. I've always come at it from sort of a software programming perspective, really appreciate what blockchain could do for the internet in particular. And so, yeah, late sort of 2017, built a couple of my first Ethereum mining rigs, built a Changelly competitor early 2018. It didn't really go anywhere after the market sort of crashed, but always kept an interest in crypto, kept the rigs running. And then when things started to pick up again in this bull market, sort of took a deeper dive into some of the technologies. And with my company, we're actually looking at launching a couple NFT products shortly. So yeah, lots of excitement, and I'm looking forward to seeing where crypto takes us.
Yeah, it's awesome. And NFTs are in the news lately. So I'm sure the people watching would like to know more about NFTs and how to get into the whole crypto space. So let's move on to Basir. Basir.
Yeah, so I got into crypto in 2017. The big thing for me was I just recently discovered Bitcoin, where you got a system of money that is trustless. You don't need intermediaries. That, to me, that was fascinating. Like, how do you solve that problem in computer science? And then I saw Cardano, and I saw that it was being built in Haskell. And as a result of that, to me, that was pretty impressive, because I worked with Haskell back in university, and it just provides some really strong guarantees of correctness, speed, and things like that. So that's when I went all in, and then the markets crashed.
Yes. So for the guests, for the viewers, Basir's a computer scientist as well, and what he just said is kind of foreign to me, and probably foreign to our guest here, Andrew. And thanks, Basir, for joining us, because you're going to explain a lot of what's going on with the other coin, because people only know Bitcoin and Ethereum so far, but you're talking about ADA, which is another coin, another token, another generation of crypto. So let's get into that soon. Andrew, let's go on to you.
I don't know what you lot are all talking about, so I'm just here to plug my cider. Summerlin cider, straight from Naramata, or from Summerlin in the Okanagan. Excellent stuff, premium cider. Get it, you need it. I got lost during most of that. My only people have been talking about like Bitcoin and all these other things for so long, and I've had a lot of pressure to finally get one, and I've never actually gotten in my way. Alex sent me $10, which is now $8. So basically,
you're welcome.
Yeah, it was like $17 the other day, but now I owe $2 to something I don't even know. So that's cool.
Welcome to the crypto space, Andrew.
That's right.
Yeah, no, everyone swears by it that loves it, and I don't know why. So I'm just here to try to learn, but mostly just to drink this fantastic Summerlin cider.
So Alex comes to you. He's like, I got this new technology you can invest in, and you're like, sure. And then the next day, it's like,
and it's gone.
But I asked Alex before. I said if I had some extra money, should I invest? And he said, I can't remember. It was a really good answer. It was like, yes, but only if you really know what you're doing. You have like, you don't need the money soon, and it's going to have to be built up. See, I can't remember that part.
Yeah.
Like the word for word.
No worries, because
in the end, I said no.
Well, that's no worries, because the first topic I'm going to talk about is beginner's guide, like how to start investing in Bitcoin. And I only say Bitcoins because people know Bitcoin, but there's different blockchain technologies that you can invest in. And I'm not even sure if that's the correct way of saying it. Like, so what would you say the difference between like Bitcoin, Ethereum? Are these blockchain technologies, or are they like a type of currency I can invest in, Alex? So like, as a beginner, just say I was explaining this to a friend, or I was trying to get a friend, like for example, Andrew, like what did you say to Andrew to get him in? And is it a good time to invest as well? So like, let's cover those topics.
Yeah. So first off, blockchain is like a technology. It's like the bottom of cryptocurrency. Cryptocurrencies live on top of blockchain, and it's just cryptocurrencies are just way to send money and like basically value between people.
Yeah.
Blockchain itself is just like a decentralized way to store information. So these days, everybody, like take Facebook, for example, every Facebook user puts their data into Facebook servers, where blockchain lets people put their data into servers all over the world that nobody specifically owns. And so there's a lot more transparency. There's a lot more actually redundancy and security around that. And you have a little more ownership as part of that community over your own data. Yeah. So there's a lot of benefits to blockchain itself, but then cryptocurrencies on top of that are just a way to send cash between people, value between people.
What would you say like is the like problem then with what we do currently? Like, I go to the bank, I get my money out. I can do e-transfers. It's not an issue. I use Canadian dollars. I use American dollars sometimes when I'm trading on the NYSE or the NASDAQ. But it seems like you and Basir, you're crypto enthusiasts. So why would we, as beginners, Andrew and I, even care about cryptocurrency?
Yeah. So there's a number of ways to answer that question. The first off is, if you are looking to invest, like if you're looking for an investment vehicle, crypto traditionally, like Bitcoin specifically, on average is increasing by 200% per year. So if you're looking for speculation and you want a risky investment asset, then cryptocurrency is a useful means for that. If you're looking for the actual utility to send people cash, it does that now as well. And the main benefit over the centralized banking system, there's quite a few different arguments here, but one of them mainly is you cut out all the middlemen. There are fees, but it's a lot more straightforward. I can send you any sum of money in minutes with the same amount of fee. So there's a lot of these sort of core benefits that the traditional banking system just can't do, because it's so big and there's so many middlemen. Like take, for example, making a credit card purchase.
Yep.
People don't realize, but there's like 6 steps that happen in between, and then they come back for it to clear. Like you don't realize that, but for cryptocurrency, it's literally, I'm sending you money directly.
That's it.
There's no middleman. Yeah.
Right. And I'll use an example. I mean, Andrew the other day in his wine business, he got stuck or held up by, I think, RBC or one of the big banks in Canada.
It's still not there. So I paid them a wire transfer. The RBC was down. So I had to go into the bank to do the whole transfer. And then it got sent back to me a week later. And then I had to resend it a week and a half ago, and it's still not there. And now it's just kind of floating in the middle of nowhere. I called RBC again. I spoke to John. Let's make him accountable. Yeah. And he said, he's like, I don't know. He's like, I don't really have an answer for you. He goes, maybe talk to the Bank of Mexico. And I said, what do you mean? Like, that's a lot of money just sitting in like nowhere land.
Yeah. So one person who does not like centralized banking is Basir. And Basir, what would you say to the beginners here? Like, I know you have shared with me that like you rather take what you make like in American or USD or CAD and just like take a percentage of it and put it in crypto. Why do you do that? And how easy is that to do? and how easy it is for a beginner to start doing that? Because I think we talked about that the other day.
So I guess when I started, the easiest thing to do is actually just buy it on Coinbase, and Coinbase actually just has a lot of cryptos now. So like I remember back in the day they didn't have Cardano, but now they pretty much have a lot, and they keep adding. And so the Coinbase it's really simple to buy. The only problem is that there's a lot of fees.
Yeah.
I think it's like $50 when I was trying to make a transaction for 1,500. But it's super simple. Like you just put your credit card information in, and then you're good to go. And back in the day, they didn't have a lot of KYC. I don't know if they still do. So yeah.
KYC is what exactly?
Know your customer. So basically, like putting in your information, like your passport or driver's license, and things like that.
And this
so it's a process.
Can you trust like these internet? So Coinbase, for example, you can trust this entity to take care of your identity and your funds.
I can't say. I mean, sometimes they get hacked, but generally, I guess with these big companies, you can trust the most 9 times out of 10. Yeah.
So you're using your bank credit card.
Yeah.
To go into this crypto thing, this Coinbase.
Right. Yeah.
Okay. But like, does crypto have like a card or anything, or?
You know, if you actually go to crypto.com, they have a special card where basically what you do is you can top up. It's like a debit card. It's not really a credit card, but you could top it up. So you could send in crypto into it, and then it gets converted to US dollars, and then you could just use it just like that. So that's probably like the fastest way to use crypto in like your day-to-day transactions.
Well, how do you safeguard over your stuff? Because you were talking about wallets before. Can you go over a little bit about like protecting your assets?
What's like the difference between using a bank at that point?
Yeah.
Bank. Okay. So what's the difference? Like, why not just use the bank, basically?
Yeah. So, why not use centralized banking?
Right. So basically, like, you know, you got to sell your crypto, and then after that, there's quite a process to sell it and then withdraw it into your bank. There's like an e-transfer and things like that. So, whereas you could just go to crypto.com quickly.
Well, I guess like I'm still trying to grasp the advantage of
okay.
And a newbie investor, like, you know, having some money in a bank and then, you know, start, I would say, being part of this like innovative way of banking, right? Yeah, exactly. I would like ask you that.
Right.
Easy. So let's go to Alex. Basir and then Alex on this. Let's hear what they got to say.
Okay, so basically, like Alex said, you know, there's no middleman involved, which is a pretty big deal. Like, you know, Andrew just said, like, these transfers are blocked, and like you got to go, okay, where's the money, so on and so forth, right? But with crypto, that would never happen, like, right? So it's just these transfers, it's practically impossible for these transfers to be blocked. So, and the reason why is because there's no middleman involved. There's nodes on the network, but you know they're not responsible for blocking you.
What do you mean by blocking? Who's blocking what?
Like a bank could block your transfer, right? They could ask for more information.
They have. I don't know. That's exactly what I'm going through right now.
Right. Yeah. Exactly. So that would never happen if you used crypto, Andrew.
Those assholes said it was for security reasons. How dare they?
Yeah. Yeah. Exactly. So there's no such thing in crypto. No middleman. The other thing, second reason is there's no middleman, and so there's no central authority that's in control of the money supply. So what that means in effect is that your money supply is never inflated. Like there will always be a maximum of 21 million Bitcoins. And, you know, different cryptos have different maximum supplies, but basically you'll never lose your purchasing power. So, yeah.
Okay, so it sounds like it's like a hedge towards like the Canadian or American dollar, right? So you can, instead of buy gold, you would buy, I would say, in other words, cryptocurrencies, internet money, and internet money, depending on what you invest in, is safer. But I want to give Alex a shot at like, why would a beginner take their hard-earned dollars and invest in this, I would say, unregulated space? And is it safe to invest in this unregulated space?
Well, a couple of things here. First off, getting your money in, just tackling that, you do have to convert your fiat money, like your cash, into crypto. And Coinbase is an example of an exchange, right? So you need to go through a crypto exchange to get crypto. But once you have crypto, you can get a crypto wallet on your phone and hold all of your money just on your phone, just like you would in a wallet. And then in Andrew's scenario, from his phone, he could send crypto directly to his vendors in Mexico because there's no border concern with crypto, right?
Assuming they take crypto.
And that's it. But it's really simple. All they'd have to do is provide their wallet address to you, and you could send a direct debit. Why would newbies want to get their money in? I mean, right now there's all of the hype about everybody wants to get rich, right? And Dogecoin is a perfect example of that.
Doge.
We'll talk about that, I'm sure, but that it's just the speculative nature of crypto. Everybody's on the hype train of everybody thinks they're going to be a millionaire, right? Checking their phone every 5 minutes and they have like $100 in. But like that aside, there is utility in crypto as a payment system already. Like there are hundreds of merchants, especially online stores, that accept cryptocurrency as payment. I mean, the big boys are getting on board. PayPal now has a whole crypto suite. Visa has publicly stated that they're working to integrate crypto into their Visa network, which, I mean, once that happens, crypto really hits the mainstream and you'll be able to buy anything with Bitcoin or Ethereum. But those, probably not those coins specifically because the fees are expensive, but we can get into the details of fees.
So that's a very important point, and I think it's not stressed enough, is the fact that you can start trading cryptocurrencies for real goods. Now, Andrew, if you want to make a plug-in for your cider again, if your vendor said, Andrew, do you accept Bitcoin? What do you say?
I'm making the plug.
Yeah, go ahead.
To the supplier or to my customers?
So your supplier, supplier or customer.
I do have one of the liquor store groups over here does take Bitcoin now. They actually have Bitcoin machines in their actual liquor store, and they do take it as a payment now. To my suppliers, I mean, none of them. I don't know. We're not really in the industry knowing a lot about crypto or programming or any of the other words you guys said.
So if you said to them, right, like my bank transfer is holding me up, my bank's giving me a hard time, and you said, do you accept crypto? And they're like, yes, we accept one of these currencies that I have up on the screen, like we accept Ethereum. Would you? Yeah.
Assuming I knew how to do that, maybe. Like I don't know. To me, like if I put all my money in Ethereum and then the next day it goes down, like my $8 I have left, like am I just out of all my money? Probably. Like.
Yeah. So I guess. Go ahead, Alex. No, go ahead. Explain. Answer Andrew on that one.
Yeah. No, you're right. Like, crypto right now is an extremely volatile store of value, right? You put money into Canadian dollars because you know it's going to be worth $1.21 US. Like, the whole point of currency is a store of value, so you can keep value safe.
Right.
Cryptocurrency right now, like this is a perfect example. Over the last week, we're down like 40%. So yes, you lost 40% of your money in terms of value against the fiat currencies. So we're in this weird stage of the economy, the crypto economy, where everything is still based off the US dollar. There will be a point, I think, in the future where everything's based off of Bitcoin. And that we won't get there until the crypto markets are a lot more stabilized, and probably until Bitcoin's almost all mined out, you know. But
what do you mean mined out?
Okay, well, Bitcoin, and this is why we have bull runs. Is Bitcoin's
gonna have to explain bull run too?
Yeah. Okay.
So go ahead. Talk about Bitcoin real quick because it's a very important subject. Yeah.
Okay, so every 4 years, Bitcoin goes through something called the halving. And it's a big deal because Bitcoin runs on a network that pays miners to keep the network running. And every 4 years, the rewards that miners gets cut in half. And so we get these crypto bull runs around the halving points. And that's why you see this, like in 2017. The last one was 2013. That was the first real Bitcoin bull run. And then there was a lull, and then 2017, and then a lull, and now we're in this sort of third major, maybe fourth bull run. But it's due to the way Bitcoin works. Is every 4 years the rewards get cut in half, right?
I think it's important to state the fact that, Andrew, this is important, and this is kind of one of the reasons why crypto actually took off. And I always like to find out why things are popular, like to the point where the adoption happens and people forget why they start adopting it. So Bitcoin only has 21 million Bitcoin. So there's only 21 million, and they haven't been mined yet. So if we were in I don't know how to describe this, but it has a finite supply. It doesn't have infinite supply, meaning Bitcoin, there will only be 21 million ever in existence.
Why 21 million?
Because the creator of Bitcoin only had a cap of 21 million Bitcoin. So maybe Alex or Basir can explain why, but I only know how many there are. So there's only 21 million. You can't create any more than that. And here's the thing with American dollars and Canadian dollars. They can be printed infinitely, which would cause your dollar to be worth less over time because it's being printed so often, making the dollar in your hand worth less than when it got to you and the next day, because of the printing from like central banks. Central banks are like the ones that print all the money in circulation for our country. But Bitcoin, internet money, has a finite supply, and that's why Bitcoin is the first one. People trust it the most. It's the one that's talked about. But as you can see on the screen, there's new coins or new tokens being created. So we'll talk about that in a bit. But if you, Alex and Basir, want to go over Bitcoin, like based on what I had said, is that accurate? And why are there only 21 million? And is that the reason? Like it's there, like Bitcoin's the OG, and will it still be the OG? Meaning like forever relevant.
Yeah, I'll jump in quick here. So yeah, currently there's about 18 million Bitcoin. Theoretically, I think the year is 2140. All Bitcoin will be mined. So you have to mine a Bitcoin for it to become part of the circulation. And so that's where this halving idea comes from. We don't have to get too complicated with that, but the fixed supply is important because it sort of sets some economic rules that everybody who uses Bitcoin has to play by. The price of Bitcoin is a lot higher than other cryptocurrencies by relative nature because it has a lower supply. Like Ethereum, for example, doesn't have a fixed supply. You like every Ethereum is being created with every block that's mined. So the economics are different. In traditional, like stake the U.S. government, the U.S. bank, they have a couple tools to adjust the money supply. They have the amount of money that in the economy, so they can print more money or decirculate money. They also have interest rates, right? And so they use these tools to regulate the pace of the economy. The problem with Bitcoin, which is actually, you can argue this one way or another, but it's actually more difficult to regulate because you don't have these tools to adjust the parameters of the economy. So a fixed supply has some benefits, but it's also very rigid. And that's also leading to why there's so much volatility, because you can't adjust based on what the economy is doing. So there's plus and minuses. It's economics, right?
But overall, you see a value in holding Bitcoin for the long term.
Okay, so yes, because there is a trend right now, especially with institutions eyeing Bitcoin as a replacement for gold. So gold has been the unit currency against the US dollar since pre-World Wars, right? Yeah. Gold has been like the thing that you hold on to when the economy's in trouble, because you know gold will always have value. And that's how the institutional investors are looking at Bitcoin now. So it's becoming a digital gold. And by that, it means that the more people, the more institutions that buy it with a fixed supply, the price is going to go up. Okay. So holding, especially right now in this market, Bitcoin's crashed. It's a decent buying opportunity. Long run, yes. I personally think, not financial advice, but I personally think we're going to hit a six figures Bitcoin within the next couple of years. And then from there, who knows, but I think it's going to get pretty big.
Okay, I think Basir might have a point on this. So if I was to say to Andrew, I think you should get Bitcoin, but then I think Basir would jump in and say, I think you should get ADA. So I put this on the screen: Bitcoin versus Ethereum versus Doge. Which coin or which token is right for the day-to-day transactions? Like if Andrew's customers came and said, we want to buy your cider and we'll buy it all in Dogecoin, should Andrew accept that trade? And should he accept Bitcoin, or what should he accept, and what is the appropriate currency? Because I think, sorry, go ahead, Andrew.
Oh, I was going to say first, it's Summerlin Cider. Don't forget to say the brand name. And
Summerlin Cider.
You keep saying ADA. Is that the dog coin thing?
No, ADA is. I'll let Basir explain. Actually, let's go to ADA right now. Let's go to ADA versus like Bitcoin. I'm going to change the title on this one and say ADA versus Bitcoin. Can you explain ADA, Basir? Because I know you are not a complete fan of Bitcoin because it's old tech, right? So go ahead and explain that.
Yeah. So I mean, really, I just look at it really simply. So, what's the transaction cost and what's the transaction speed? So I just want the transactions to be fast, and I think most networks, they already do that. Sometimes it takes a while, but I know for ADA, it's pretty fast. And then there's transaction cost, right? So it's got to be as cheap as possible. I do remember that it's about 0.17 ADA to do a transfer. But if you want to swap Ethereum tokens, like ERC20 tokens, like you guys probably heard of how crazy the gas fees are. So in other words, like right now, it's not really working. I mean, we can wait till Ethereum 2 comes out and then see how that goes, but we don't know when that's going to be released. So it's really about transaction costs. Bitcoin as well. I remember back in like 2017, the fees were like $20 US dollars. I think it's around the same now. I think it was like $30 last time I checked. And they're working on it. They're working on the Lightning Network. So, but that's going to take some time though. And last time I Googled for updates on the Lightning Network, the last update was like July 2020. So it's hard to tell if they're making progress or not.
Let me just pause you there, BC. So I think you got a little more into the tech, which I'm trying to understand as well. So you're saying ADA, you're saying Bitcoin, and I'm going to go with Alex here too. ADA, Bitcoin, Ethereum, Doge, these are all technologies. At the same time, they're also currencies. Is that right? Okay. So when I buy, let's say ADA, am I buying it because it's stable? It has better technology. It has better technology because it has a lot of support from like developers like yourselves. Is that why I'm buying it, or what's the thought process if I'm jumping in and I'm telling Andrew, hey, you should jump in, you should get Bitcoin. Andrew says, why Bitcoin? Why not one of the other 1,000? Like, what makes ADA greater than Bitcoin?
I can give a brief history on cryptocurrency here. So Bitcoin was the first. Satoshi Nakamoto, whoever that person or group was, wrote a paper that explained this protocol that makes Bitcoin work. So that was like layer one. That was the first cryptocurrency. From that, a lot of people got to dreaming up, okay, how can we make this better? And Vitalik Buterin, who's one of the co-founders of Ethereum, and a bunch of other co-founders created Ethereum. And so that's a layer 2 blockchain technology. And that added in something called smart contracts, which lets you do a whole suite of other things. ADA and Cardano is a layer 3 blockchain. And so Charles Hoskinson, who's the one of the co-founders of Cardano, if not the creator, I'm not sure, but he was a co-founder of Ethereum. He worked with the Ethereum team and split off and started Cardano because he knew Ethereum was going to run into all sorts of issues and didn't believe in the base technology. And so there's actually another network called Polkadot, if you scroll down a bit.
All right,
who's naming all these things?
Yeah, I know.
Developers, man.
Yeah, so see Dot there. I can't remember the creator's name, but he's another co-founder of Ethereum. And so there's the people who worked together and created Ethereum sort of branched off and created these other networks based on where they thought blockchain should go. And so, Cardano's this layer 3 technology. It's promising a lot more efficiencies and fixing a lot of the issues that
Yeah.
Ethereum has. And so there's kind of a race right now between Cardano and Ethereum. Cardano hasn't even launched smart contracts, which Ethereum has had for a while, but Ethereum has horrible gas fees, and they're working on this 2.0 upgrade to fix that. So
in terms of fees, it's like a bank fee. Like if Andrew was to do a transaction, it would cost him, like if he's sending $1,000, they're like, sorry, that's going to cost you $300 to transfer. He's like, what the hell is that? That's way too much money, right? Okay.
Yeah. And it depends on demand in the network. So when it's the Ethereum network, when lots of people are sending transactions currently, the fees go up, right? So that's sort of the analogy, is like, it depends how many people are using the network at that time.
So you're saying like I could just create my own little currency and name it Andrew Coin?
Yeah. So part of Ethereum is this idea called ERC20 tokens, and it allows anybody to create their own currency, right?
ERC20.
And you there's a lot of ways to create these things now. A lot of people have made it really easy. So you could go create an Andrew currency and then shill it to anybody you want. Buy my currency, right?
So are these currencies down here like off of Ethereum then? Like all these other guys?
Not all of them, but quite a few of them. Ripple's not. Polkadot's not. Like if you scroll down, there are some popular here.
I'm buying Polkadot. I'm convinced.
Polkadot's another layer 3. So it's like people have a lot of opinions about this, but Polkadot and Cardano specifically were built as a successor to Ethereum. Right?
Okay. But if we were talking to our super stock bros right now, so people who are like, mature, ready to invest, ready to do business like Andrew, and his customers are going to start adopting crypto because they just don't like going through central banks anymore because of their fees. What would you say is like the appropriate token to exchange, or is that to the discrimination of the the vendor or the business? What would you say, Alex?
It depends on it depends on the size of the transaction and how often. So Bitcoin's great for large transactions because it's you kind of get, like Basir was saying, it's like $30, right? And if you're sending a lot of money, what's $30? A bank would probably charge you like an order of magnitude above that to send a large sum of money. So it depends what you're trying to do. Ethereum is I would say a little cheaper on average, probably faster transaction time. And then, like Basir was alluding to, Cardano as just a pure payment platform is probably a little faster, cheaper. But there's a little subtlety here. It depends what you're trying to do. How much money, how often, all of those sort of things. Yeah.
Okay.
So if I had like $100 a month, is it worth it to just chuck into one of these things? And which one would I pick? And how would I know?
Okay, so for newbies, start with Bitcoin. Like every not financial advice. I have to keep saying that. But
not financial advice.
It is the most. It is the least risky long-term cryptocurrency.
Basir, do you concur?
Yeah, Basir, what do you think?
You covered up
long
his face.
term. I don't know.
Yeah.
Yeah.
No, Basir, like honestly, you told me when I got in.
Yeah.
I was convinced ADA is the best investment, as well as this new one called Ergo. I mean, I did dabble with Ripple because they have some sort of thing with the U.S. government, but I do like ADA. I do like the founder of Cardano. He seems pretty smart. He has got a good team behind him, and he's fixing what he tried to fix in Ethereum. So I like the story. I like the backstory. I do like the technology, the way you told me about it, but so I kind of want to see what you versus Alex would say. Like, what's the right coin for everyone here?
So I guess so if you're starting off, one thing that I've noticed about the markets is that Bitcoin's the leader, right? So if Bitcoin goes down a bit, then all the altcoins go down a lot, and Bitcoin goes sideways, then that's when the altcoins really shine. So basically, if you're starting off, then Bitcoin is nice because even though it's volatile, it's not nearly as volatile as the altcoins. But, typically what happens is that it's like a gateway drug, right? So you get into Bitcoin and then you like all the other ones, like you make a little bit of money, you get a little bit excited, and then you try your hand at other ones. So it's really just a process. But Sure, yeah, you can start with Bitcoin.
But what do you think, Andrew? Were you convinced on any one of those, or what's going on?
No. So I have $100. Why am I
Yep.
putting into like a Bitcoin versus an RRSP?
To make more money.
It depends. Yeah, like Bitcoin has a way higher possible return, but it's risky.
Neither of you guys sound confident about this decision.
Well, it depends on your risk level, right? If you want to get into like portfolio optimization, depends how much you care about that money and how much you think you should expect to earn. Right?
Well, let me ask this then: is $100 even enough to really like is it worth it?
Well, what do you mean by worth it? Like putting
Like,
any
like,
money, putting
so
a
I have-
dollar into something is worth it if you are going to make money on it, right?
Yeah, like if I had $1,200 in the year, and I just wanted to like make something out of it, but is my return just going to be like a little bit and that's it, or?
Well, it depends when you get in, right? So right now is where Bitcoin has had a huge crash. We're below its 20-week moving average, which is kind of just like this standard that everybody looks against, and we're in a very good buying opportunity because altcoins are way down. Bitcoin is in this like optimal range below the 20-week moving average where it's going to probably oscillate a bit and you can pick up on the dips. So one strategy, for example, is every Monday Bitcoin traditionally has a fall. Sundays, just whatever reason, people sell on Sundays. And so if you just buy a fixed amount every Monday for the next couple of months, you're probably going to be looking pretty good later in the year because Bitcoin's so low right now.
So that's interesting. I haven't heard of that strategy, but I do want to understand. So Andrew's that example is interesting because I never considered why would I invest in my RSP versus like a cryptocurrency, and I would say the only thing is you're staying within the centralized banking area, and RSPs have kind of a rule where you can't actually touch them until you're 60. Whereas once again, we go back to cryptocurrency, you kind of have that flexibility. You can jump in and out. You don't pay like the crazy fee that you would if you pulled out of your RSP.
Oh yeah, that fee is ridiculous.
Yeah, so there's more rules in the banking world.
And the return on a return on an RSP is like 2 to 5% a year. Like if you have $100 and you just want to throw the dice, Bitcoin on average goes up 200% per year. So you'll end up with, you know what I mean, $300. Yeah.
Hey, can I rewind really quickly? The Bitcoin credit card thing, is that like a bank credit card where you get a limit based on your credit and then you just kind of spend? Or is it like you put money into it, like a prepaid card?
It's like a prepaid cash card. Currently.
Okay. That's all I need to know.
The way I look at it is like in terms of making money, it's if you look at Bitcoin's history, right? If you invest at any given point and you move forward 4 years, you're always profitable. So, if you're holding for 3.5 to 4 years, you're always going to be profitable. There's going to be crazy ups and downs. You'll have 80% losses, but if you wait 4 years, you're always profitable.
Yeah.
Not financial advice.
But I want to be rich tomorrow.
Yeah. So there's a lot of people. Yeah.
Well, hold on. Let's move on to
just buy a bunch of shit coins and you'll.
Yeah. That's an asterisk.
So quickly before we move on to that, I just wanted to cover what like a shitcoin and an altcoin are, Andrew.
Those are real things?
Yes.
Go to
what's the dumbest name?
Doge.
If you go to
PooCoin.app
and you'll get a list of all the shit coins you can buy.
Oh yeah? Hold on, let me open
Are
that
these
up.
real?
Yeah, this is real.
Ali, also open up SummerlinHeritageCider.com.
Just give me a second. Let me put you guys back on the screen while I get this open. But let me just talk quickly while I open it. So an altcoin is an alternative. Is that right? Alternative to Bitcoin and Ethereum, I think, is an altcoin. So everything we've been talking about, ADA, Dogecoin, these are all alternative coins. I would even consider Dogecoin a shitcoin because, Alex, you want to give a quick history on what Dogecoin is and why it's been popular? Let me just put that topic on the screen now. Yeah, I got Elon Musk, pumping it.
Yeah, right.
2 words, Elon Musk.
Yeah, like Dogecoin.
Loose cannon.
Yeah. Dogecoin was created.
Isn't that the dude from SNL?
That's how you know him? Yeah. Not from his cars or rockets. That guy from SNL. Yeah.
Oh, he's the guy with the truck that the window exploded in the thing.
Yeah. He's the Doge father, supposedly.
Yeah. That wouldn't happen to my Chevy, but go on.
Yeah. So yeah, Dogecoin was created as a joke, like no joke. A couple of developers took Litecoin, I think it was Litecoin, and basically just copied it, and within a couple hours spun up a new network and called it Dogecoin to make fun of all the seriousness that was in the cryptocurrency like market at that time.
I can respect that.
Yeah, and recently, for whatever purpose, Dogecoin has gotten all this hype. It kind of falls in the category of the GME pump and the whole diamond hands movement.
Yeah,
that's kind of where it's coming from. But in terms of a network, Dogecoin has basically zero utility. Like there's no reason to use Dogecoin other than speculative investment. Like Ethereum has utility. It has smart contracts. You can write applications on top of it. You can make deals. You can write like law contracts. Dogecoin is literally to send you like dog dollars. That's basically it. So yeah.
Didn't Elon like tank it or something on SNL or?
Yeah, so he admitted that it's a hustle, and it kind of is, because Dogecoin should be like 0.0001 cents. Every time, I can't remember, I think it's every minute, 10,000 new Dogecoin are created. So you have this infinitely increasing supply, and as we know, as supply goes up, your price goes down to match the amount in the economy. So over time, there's just going to be runaway inflation with Dogecoin. So like your Dogecoin will become less and less value and less value over time. And then
so don't buy Dogecoin.
Yeah, other than entertainment purposes and pure speculative hype and fun, which is not, I'm not discounting that. Like other than that, there's not much utility in Dogecoin.
Yeah.
So if you want to, yeah.
Do you guys have Dogecoins, both of you?
I did, because I was chasing the pump.
Yeah,
but I don't anymore, because it's like that could go to zero like tomorrow. Honestly,
yeah, it's honestly sitting there with giants and doesn't even realize it's like.
Yeah,
I think there was a funny meme on that, because it's like Doge is up there with all the $1 billion assets, and he's like, "Why am I here?" or something.
Yeah. And then the scary thing is, I think it's 90% of the entire Dogecoin market cap is owned by 4 people.
And one of them is Elon Musk.
Maybe, yeah. So if one of those whales decides to dump all their coins, you're all the retail investors are hooped.
So Andrew, this is like equivalent of like these guys all did their homework. They handed it on time. They did all this awesome work. They had like 20 million developers working on it across the world, and this thing decides to be worth $45 billion.
I can respect that. I like that hustle.
But that's why it's winning, is the entertainment value, man. Like, people love the underdog, no pun intended.
There is actually a guy, I'll share a quick story. He's getting popular right now because of CNBC covered him. He spent his entire life savings, $180,000, and he bought Doge at, I think, 6 cents.
Oh, God.
And on SNL, his bank account was $2 million, and he refused to sell on that day. And now he's back to, and don't feel bad for him, he's back to 1 million. Yeah, and he still refuses to sell because, like the GME guys, he says he's doing it for the movement, to show people that Doge can compete with giants, and it's like the people's coin. So,
I'm still down $2, so I'm going to panic sell soon.
Yeah.
Cut my loss before it gets serious.
Yeah. So we only have like a few minutes left. I wanted to get through like some quick topics because Basir's got to drop off in soon. So quick things here. Like, as an investor, you kind of want to know the background technology here. What's proof of work versus proof of stake? Can you guys quickly cover what that is? Alex, you go first, and then Basir, you cover proof of, I think, stake. You cover proof of work, Alex.
Sure. So Bitcoin, for example, is a proof of work network. And what that means is it's just a way that this network comes to consensus. And by that, I mean, it's how the network says who sent money to who, I guess is a simple way to put it. So
they're validating transactions.
That's exactly right. And how they do that is the network pays miners to mine all the transactions that happen. And mining is just a process of using a very fast computer to figure out a way to explain a group of transactions in a very finite way. And so you spend a ton of computational power figuring out these hashes, a way to store these transactions, and it's competitive in nature. So you have miners all over the world competing to figure out the hash, this little hash, the fastest, and whoever wins gets paid, and they get paid Bitcoin. And so it's a very energy wasteful system because you have many people spending electricity to find one answer, and it's whoever gets there first wins.
And that goes back to what we were saying about you can mine up to 21 million Bitcoins. So they haven't all been mined yet. And that's why you hear about like the energy costs and such. Are you a miner yourself? I think you said you were at the start, right?
Yeah. I do GPU mining though. I don't mine Bitcoin because you have to buy very specific computers to mine Bitcoin and other networks. GPU mining, it lets you mine a lot of different things, but specifically Ethereum. It's the way Ethereum's built is better suited to GPUs, and actually, I won't get into this, but it's called ASIC resistant. So you can't build these specific machines like Bitcoin miners to mine Ethereum. So yeah.
And what problem are you solving with that?
With GPU, so competition. So with Bitcoin, the more miners you have, the better chance you have to win the block and get paid.
Okay.
But it's very difficult to get paid to win that block, right? GPU mining, it's a little easier to get set up. And what's a way to put it? Like you can contribute to pools and you can kind of get a guaranteed payout. You can do the same thing with ASICs, but mining is a whole other topic. So
right. No, I just wanted to understand. Yeah. Okay.
Yeah.
So that's the Bitcoin, and you do proof of work to validate the transaction and block.
Yeah.
And then no, go ahead. You had another point?
Just Ethereum right now is still on proof of work, but Basir can talk about this. They're planning on moving to proof of stake. And yeah, there's a lot of reasons for that.
Okay, so Basir, can you describe what proof of stake is, which coins use it, and is it better than proof of work? Is it better for the environment? Is it better in general? Or is it, I don't know, it's kind of like pick your whatever. Can you explain it?
Yeah. So proof of work is
proof of stake.
You gotta, proof of stake. But basically what you're trying to do is you're trying to validate transactions. And so with proof of work initially, you have to make it so difficult to attack the network. And one of the ways you'd attack the network is by having all the mining power, basically all the electricity. So if you had like an enormous amount of electricity, you could say that, hey, we got control of all the transactions and we're going to validate it a certain way. With proof of stake, on the other hand, instead of using all this energy to mine transactions, what you're doing is you're essentially saying, okay, so we have, let's say, 32 billion ADA, like Cardano is a proof of stake crypto, right? So let's just use that as an example. So with all the 32 billion ADA that is staked, it's basically it's a weighted voting system. So you're saying, okay, with all this ADA at stake, what are they voting for? Are they voting for these transactions as legitimate or illegitimate? And so in accordance with this weighted voting system, that's how you basically validate transactions. So I like to look at it from like an attack perspective. So
why would there be an attack?
Well, there have been cryptos in the past that are smaller than Bitcoin, and they have been attacked. It's called the 51% attack. And it's easier to do that on smaller cryptos because they're small. They don't have a lot of energy going on. So like I remember one, well, I won't give out any names, but basically when they get attacked, you spend all this energy that they didn't anticipate that you're going to do. And as a result of that, you can put in fraudulent transactions. And as a result of that, you could get free money basically, right? If you have a lot of power. And so, yeah.
And this is foolproof, like proof of stake.
Proof of work.
Is like foolproof. Like, for example, my money is protected in ADA because they do proof of stake.
So there are attack vectors on each proof of work and proof of stake, right? But it's just like different attack vectors. So in proof of work, in order to attack the network, you need a lot of power, right? Like in Bitcoin, you need a lot. So it's never been attacked really. But in proof of stake, you've got these things called stake pools. A stake pool is just long story short, there's just a bunch of people that choose this organization called a stake pool to validate transactions. So if you wanted to attack proof of stake, what you would do is you would go through, like, let's say 100 or let's say 500 stake pools, go to each one of them, hijack them so that they all agree to these fraudulent transactions, and then that's how you would take over the network. So there's just different attack vectors you could do.
So is my investment safe in a proof of stake?
As long as nobody attacks it.
But so far there hasn't been, or has been?
No.
They're very secure technologies.
Right. Yeah. So the idea is that the way to be convinced that your investment is safe is to understand how much coordination it would take to attack it. So with Bitcoin, the figures where they say it takes as much energy as Denmark, right?
Okay.
So are you going to have more energy than? Yeah.
You need 51% of Denmark's energy to even attempt a 51% attack. So
right.
It's like, and the actual cost to gather the technology and implement the attack wouldn't be worth the payout. Right?
Yeah, exactly.
And so there's these networks are all about monetary incentives. And the cool thing about Bitcoin is it kind of incentivizes human greed for a productive output. Right? Yeah.
So okay, yeah. It sounds like, Andrew, maybe you jump in here, but
I zoned out. What's going on?
Yeah, exactly. It's such a new space because you're talking about investment. You're talking about like programmability, like how much development is behind a coin. Now you're talking about like its security, and like at the end of the day, it's like, should I just leave my money in like a central bank at this point, or is it worth it to get into the space? And maybe you can shed some light on what you can do with your cryptocurrency. So Alex, do you want to just mention what NFTs are, why they're on like popular nowadays, and what you could use them for? Because I see like NHL and NBA and all these guys start using NFTs to sell like player memorabilia and stuff on the blockchain. So that's interesting. Like you can only buy those. Can you explain what an NFT is, and like, is it growing in popularity, or what's going on there?
Yeah. So NFTs are basically a deed or a right of ownership. And for the simplest example to use is like baseball cards, right? And if you go buy a pack of baseball cards, you get like 5 baseball cards. You can think of those as like 5 NFTs. That's just one implementation of NFTs. It's like this collectibles idea. And that's what most people are using them for, is like artists are putting their pieces of art into NFT marketplaces, and then people are buying the NFT, and that guarantees that that person owns that piece of art. And so it's a way to track who owns what, and it's a very secure and trustworthy way of doing that, right? Like back in the olden days, when you buy a house, you had to get the piece of paper that was the deed, right?
Right.
And if someone stole your deed, you don't own your house anymore.
Oh man, that's crazy. Okay.
Yeah, but like an NFT is like a digital record that is very secure and very difficult to tamper with, almost impossible. So whoever owns that NFT owns it, and it's
it's digital, like a digital playing card or something.
Yeah, so people are attaching playing cards and art to the NFT. The NFT itself is just a record that says who owns what.
Like a bunch of zeros and ones, digital bits.
Yeah, and it sits in your wallet. So like when you
Your
have a
blockchain wallet or your
cryptocurrency,
crypto wallet.
yeah, on your phone, you like a trust wallet is one example. It has a list of all the NFTs that you own. So it's a list of
Okay.
all the things that you've bought, right?
So let's do a real world example. I have, is this considered an NFT? Let's just say I saw Matthews get his first 4 goals. I have a
Nice.
video of it. It's one of the first videos on the internet. It's on YouTube.
Against Ottawa, his first game. It was great.
Right. So let's just say I wanted to sell that to Andrew. Am I selling him the NFT to the video? Is that like an example of a transaction I can do?
Yeah, it's like if you are proven to be the owner of that video and you say I'm issuing this NFT associated with this video, then you can send that NFT to Andrew, and then he now owns that video.
Okay. And what's the value in that to Andrew? Is like he can say he's the owner and here's my NFT to prove it?
Yeah.
Like he doesn't even have the MP4 or whatever. I have the MP4, but he has the digital record.
I want that too.
So you can store that on the video on a blockchain. So one of them is called IPFS. It's a data storage blockchain. And so your Ethereum NFT references that data. So the NFT is like hard coded to where that data source is. And so whoever owns the NFT owns that data, right?
Okay. Is there yeah, go ahead. No, go ahead.
It's like someone can create a forgery of the Mona Lisa, right? It's not the real Mona Lisa, right? And if you can prove that it's not the real Mona Lisa, then it's not the real Mona Lisa. You know what I mean?
So digital Mona Lisa.
Yeah. Art is a good example just because like you can make copies of a digital video, but it's not the original if the original was signed to like this is like that's what NFTs are for. This is the original. This is the original data with this transaction.
It's a little bit of like funky business because
it is. It's like what is real, and it's this transition from like physical space to the digital realm. And like, why do people buy video game loot boxes? Why do people spend thousands of dollars on Fortnite like cosmetic stuff, right?
Right.
It's because they value it. It doesn't matter if it's digital or real world. It's just whatever someone values something as.
Okay. So like, let's take a real world example. Like we got Andrew, he plays Among Us. He got some costume gear for his character. Is that equivalent? He values that character now, as you can hear him say. Like he values his character because he dressed him up. Is there any can you make an example out of that for NFTs? Because I'm just trying to grasp the example there.
Okay, so the big difference is what he bought is an NFT in concept. It's just the record lives on a server that someone owns, where NFTs are on the blockchain which nobody owns, right? And so it's a public record that I own this thing. So if the Among Us owners, the developers turned off the servers, you don't own anything, right? You can't turn off the blockchain. You can't turn off Ethereum. That will never happen. So like you have this proof of ownership that will never go away.
I think that's a good point to end on right there. So Andrew, that's what's important about crypto here. You can't turn off like a currency and like cryptocurrency because it's on the internet and the internet never goes down. It like unless you have like a shitty connection. No, I'm just kidding. But internet never goes down in general because it's like you can your money lives on there forever. But if you went to the bank and the bank was closed and you can't do trades on Saturday or Sunday and your client's waiting for you to make a transaction. Yeah. So they're like, sorry, we open 9 a.m. on Monday. You're like, what the frig? I have a business to run 24/7.
They don't seem to care about me.
The blockchain is available 24/7. Your cryptocurrency is available 24/7. Crypto market never closes. So this is a very important fact that I think we can walk away knowing because it's like a different way now to transact. It's more efficient. It's for the people now. I think it's like what we say decentralized, right, Alex? It's like it's not run by a central agency like Bank of Canada or like the Federal Reserve. It's run by everyone. And you have the blockchain to validate your transactions. So next time Andrew does business with his Summerlin Heritage, he can be like, hey guys.
Summerlin Heritage Cider available now. Across stores all over in BC.
Oh, do you accept Dogecoin, Andrew?
We do not.
You should. Like, so you're Alex, you should. You can take that Doge and sell it for real money.
Yeah.
Alex
not
is
real
going to
money,
be
everything.
hired to be. You can do all my actual like crypto transactions, whatever they are.
Yeah.
Okay. I'll be your payment. Yeah.
Yeah,
I'll
and
pay you
I-
in real money.
no, hold on a second. Yeah, I want to emphasize that point.
Summerlin
Like,
Cider.
Yeah. Yeah.
what is like real money though? Money is what we define it to be, right? Or what we agreed it for it to be. Is that
It's whatever someone says there's value in, right?
Exactly.
Hey man, I'm in sales. I trade things for things. That's how I get further.
Yeah.
barter? That's the oldest trade
It's
form.
what I love.
Yeah.
Peter
So-
Schiff says real money's only gold, but no, not really.
Peter Schiff's the gold bug, right?
Yeah.
So
Anything's money, really. So
yeah, actually, money. A quick history: like money was backed by gold until the 70s, and then they took it off of the gold standard, and now money can be printed infinitely, and that's what the issue is, and that's why crypto, Satoshi Nakamoto decided like I'm just going to make digital money in 2008, made it, then he disappeared, or he, she, or group disappeared. Bitcoin has no like official leader or maintenance right now. That's why people trust Bitcoin. It's like the original, from what I understand.
Wait, what do
But
you mean it disappeared?
Oh, you should read the history on Satoshi Nakamoto, man. It's like a freaking mystery. He made this. He made Bitcoin and disappeared.
Where'd he
No
go?
one knows who they are, or it
So
could have
Alex
been
thinks
a
it's a
group
group.
of
I think it was like.
And we're all investing in this thing. We don't know who he is.
Well, here's the best part of it. You can't really like point to somebody and say that they're like hogging all like the wealth of a currency anymore, or like you can't question them. Like you can question all the founders of the existing currencies. Like you can't question anyone in Bitcoin. It was made. It works well. It does what it was supposed to do, and people use it as like the base for what's going on in the crypto market. So it's kind of like perfect scenario, actually. Like
You know why I don't trust Bitcoin? It's because every like Bitcoin office or crypto office I ever see is in the dodgiest part of the city every single time. It's like a money mart every single time I pass one. It's like all barred up and everything, and I'm like, why would I give my money to this?
Yeah. Ironically, if we understand what like Basir and Alex are trying to say here, oh, there's a cute kid.
Hi, Isla.
She probably has a Bitcoin. She probably has
knows
more
than me at this
probably
point.
more currency than.
He's got more Dogecoin than I do.
Oh wow. Yeah. So what we're trying to say here is like, so currently cryptocurrency is being adopted, so that's why it's a bit dodgy, Doge. But you could see the future right now. Like Alex and Basir are kind of leading it. Like in our age group, would say like they're kind of like adopting it. It's becoming normal. It didn't even crash to the point it crashed in 2018. Like it looks like it's taken a few hits in recent weeks, but it's definitely proven itself to be an alternate form of currency. You see corporations like Square, even Tesla adopted it at one point for buying the car. You could buy like a freaking Tesla that week with Bitcoin. People are trading in Doge to buy like beer and stuff like that in other parts of the world. So it's just
One thing to keep in mind is like we're still higher than we were in like January, right? Like it's hard to put things in perspective, but like the crypto markets were so overheated. People get so upset when it drops back down, but it's like we're still way up. And like if you're up 300% in 6 months and you're concerned about 60% drop, I don't know, man.
Yeah, exactly.
It's just the problem is everybody gets in on the hype train. And then sorry.
No worries.
Look at it from like a 4-year perspective. You're always up on a 4-year perspective.
So Basir is a very optimistic guy, and I should have listened to him because I would be up huge in ADA, but I am not as conviction as him.
Ali, which one we picking? Are we going Alex or Basir way?
So honestly, for me, full disclosure, I like ADA. I do like the
I'm
team
going
behind
with my boy Ethereum.
Your boy Ethereum.
Short term, like this is my 2 cents. When Bitcoin's below the 20-week moving average, Bitcoin will outperform everything. Sure. But as soon as it breaks through the 20-week moving average, altcoins will outperform, especially Ethereum will outperform Bitcoin. So right now, because of the risk involved, I'd say go for Bitcoin. And then as soon as it breaks through the 20-week moving average, which maybe a month or two, maybe even longer, then switch back to altcoins. But it's just things are so risky right now. Put your money into less risk, you know,
Yeah, and
non-financial advice.
Basir, what do you think?
Yeah, I agree. So altcoins are not going to perform as good as Bitcoin when it's below the 20-week moving average, and also in the bear market. But I think it's a worthy risk to take because, like, I remember when Bitcoin was rallying and ADA was flat, it was nerve-wracking a little bit,
Yeah.
but you just got to wait a month and then you're good to go. You know what I mean?
Mhm.
So, yeah.
But what coin do you like?
Right now I like ADA, the other one, Ergo. Like I like picking like certain small coins. Ergo's pretty nice. Yeah.
I see it as like, think of a drag race, right? Both of them are moving forward, but which one's going to win? Which one's moving faster, I should say.
Right.
And some of them are winning at certain points in the race. And so you want to put your money into the one that's winning at that point in the race. And then as it starts to lose, you switch it back. You actually gain more that way. So that's just my own strategy.
Only if you know the coin very well and you like trust like its technology. I think from what I understand, I like, you know, it's between Bitcoin, Ethereum, ADA, but ADA, I think ADA and this new one that he's talking about, Ergo. I think you should check it out, Alex. I think it's pretty good. But let's go to Andrew. What do you think is good to invest in here?
Yourself. I'm always a firm believer. If you have a little money, invest in yourself. Learn a new trade, learn a new skill.
That's probably the best advice out of this.
I wouldn't chuck money into one of them. I would probably take courses and try to learn, and then like really educate myself. But I'm always a firm believer in just if I have extra money, it goes to my own education. Learn a new skill.
That's fair enough, but you got your super stock bros here, and we're here to teach you, man. We're here to educate you on what's going on in the market.
Most of this went over my head. All I know is Dogecoin bad, Bitcoin for beginners. So I mean that seems like the right way to go at the start.
Honestly, that's actually enough for anyone watching this. Like, do not put your money in Doge because it's just a freaking gamble, and Bitcoin is the original. So
yeah, like they seem to both agree. Like Bitcoin in the beginning is a safe bet, and then once you get used to it, once you start figuring out how this all works, then you can start being adventurous.
Yeah, and I really thought Basir was going to really go to town on explaining how awesome ADA is, because right now a bunch of YouTubers are saying ADA over Ethereum because ADA is just performing so much better on every aspect, except for the whole contracts thing, which should be resolved soon. I am not sure about that.
Here's the other problem. Who are the actual pros in this? Because anyone on YouTube could have a channel, but like, who do you like?
Gotta be careful too.
Yeah,
I would say the pros are the people who are very impartial, like Alex and Basir. They've been pretty like mature about the whole thing. There are YouTubers who are just pure, like that leading up to SNL, were all over YouTube on Doge, and they were just freaking pumping their own thing and making money when SNL went live, and they just sold it all. Like even Elon, I'm pretty sure sold it all.
Why was that SNL episode live on YouTube? It was the only one ever that was like live on YouTube.
The first one.
I think it was by request of Elon, man, because he is just. Yeah. I think he's like the master manipulator, paid everyone off. Like I don't know. I'm just assuming he's a multi-billionaire, so he has a lot of power. Yeah.
The one thing I'll say about Elon is he recently backtracked on accepting Bitcoin as payment due to environmental concerns.
Yeah.
He knew that guaranteed when they started taking Bitcoin as payment. So using that as an out is very fishy. So it leads me to believe that something else is going on there.
Well, if he has guys like you guys on his team and you tell him about the 20 EMA thing, he bought it at the right time, sold it just in time to report on the quarter that they made $180 million.
Did he sell it though? I'm hearing.
No, it's off their balance sheet, right? So like they had Bitcoin and they sold it. Okay. They made money on it. They reported it as like income earned for Tesla.
They made $100 million off of it. I don't know if they still hold any. I don't know if anybody knows still.
Well, they said they kept 10% in their treasury of their original. Yes, they kept 10% of their original investment.
And that doesn't bode well.
Right? And he put recently that his master of coin, aka his CFO, his bag handler, held in the recent drop. So Elon knows what he's doing. Like he has people that obviously are geniuses like you guys on his team, and they control whether they buy and sell. And I think they saw what you guys saw, so they sold at the high again, and they just watched it just tank. So, and at the same time, he's like, "You can't buy my cars anymore with Bitcoin."
Yeah.
Yeah.
Well, I think the crypto market's giving him way too much credence. I don't think that'll last forever, though. I think.
Yeah, eventually he'll be the guy who cries wolf, and no one cares anymore.
Do you know?
And
Yeah. Have you heard of John McAfee? You know who
yeah, I
that is?
remember. Yeah, in 2018, the biggest deal ever. Yeah.
People are saying Elon's like this bull runs John McAfee. So
The thing with Elon is he'll be always in the media, right? Because of what he owns and what he does. So, but he'll dilute his like word by just being too much in this year's crypto. He probably knows it too. He just made a ton of money to bail out Tesla and stuff.
Yeah, he loves Monero. That's his favorite coin.
See, we didn't talk about Monero, which we'll probably talk about next time. But I think let's just wrap it up. I know your daughter wants to hang out with you, Alex, and I think a quick takeaway, I think we learned a lot about like NFTs. We learned a lot about what's going on in the market, a couple of coins. And I think, Andrew, maybe you also had a takeaway there. If it helps your business get the transactions complete, and as a small business owner, if you could transact 24/7 any time of the week, you don't have to wait for a bank approval. I think crypto is made for that very purpose. You don't want to be held up.
If that's true, I think two things. One, that would be the way of the future, just not yet. But two, couldn't the banks just like rival that somehow and match it and loosen restrictions or something? Like, couldn't they just say, okay, well, we can do this too?
All the institutions are looking into crypto right now. They haven't actioned any of them. Like some of the banks are a little, especially Wall Street banks, are a little more forward thinking, and they're probably actively getting into this. But even in Canada, like the big five are very resistant to it because it threatens their business model. It's new technology, all of those things, right? It's like I still can't buy crypto with my RBC Visa card because they don't allow it, right? So we're still playing in this like pre-regulation era of crypto in certain countries, right? So we'll see. I think crypto's here to stay now, especially after this hype cycle, this bull run cycle. I think the banks and everybody's just going to have to get on board.
Yeah.
Cool.
All right. Yeah, I think there's like a ton of more topics to cover, but I think this was like a great like first episode on cryptocurrency. And I want to say thanks, Alex, Basir, Andrew, for joining today. Like, is there anything that you'd like to comment or plug in, or a website that like viewers can check out? Just say if you want to share anything, Alex, go ahead.
Say that again. I sort of cut out there for a second.
Yeah, if there's I just want to say thanks, and if there's anything you'd like to share before we close off.
Sorry, my connection's sort of dying out. What was the question?
Thanks for joining today, man. If there's anything that you'd like to share, go ahead. Like, go ahead.
Okay. Keep an eye on spacetokens.io. That's our new NFT project that we're working on. It's like a space exploration NFT collectibles game. Should be out within a couple months.
Spacetokens.io.
Thanks. Plug.
Okay, I'll plug that in. And Basir, thanks for joining today. Anything you want to plug or say?
No, I'm good. Just invest responsibly.
Excellent. And Andrew?
Make Summerlin Heritage Cider your cider choice of the beverage.
We just write that at Summerlin.
Buying cider, think Summerlin.
Summerlin Heritage Cider. I will plug that into the comments. So if anyone wants to order it, go for it. Andrew's not currently accepting crypto, but he does accept USD or I don't know, any other.
No, we only accept real Canadian dollars.
Real Canadian dollars. So send over those Queen Elizabeths, and he'll send you some cider. Okay, so until next time, thanks guys for joining. We'll have another episode. I think this was very entertaining and very informational. All right, peace out, Stack Bros. I'm gonna do the outro.
Thanks so much. Bye.